Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now in this video, I'm going to discuss about the other deductions under section 80. Last video I have completed 80C, 80D, 80DD. Now remaining deduction 80DDB, 80G, 80E, all these deductions I'm going to discuss in this video. Because the coming problems we will come across in almost every problem, some deductions will be given. So you must know whether deduction will be allowed or not from GTI, right? So before explaining the other deductions, take a screenshot of all the deductions which I have written on the board. After that, we'll start the discussion. Come on. Now I am going to discuss the deduction under section 80DDB. Last video I have explained you the deduction under section 80DD. Now this is 80DDB. What is the difference? Last 80DD we have seen that when the SSC, any person who is dependent on the SSC is suffering from some disability, and the SSC has incurred some expenditure or deposited some amount in the scheme of LIC or UTI, then fixed deduction was given. 75,000 rupees deduction if normal disability up to 80%. Severe disability more than 80% disability, then 1,25,000 is the fixed amount of deduction. Whatever expenditure incurred by the SSC, that is in section 80DD. Now next section is 80DDB. Now this deduction is in respect of chronic specified diseases as prescribed by CBDT, such as AIDS, cancer, etc. The Central Board of Direct Taxes has specified some chronic diseases like AIDS, cancer, etc. Some chronic diseases are there which are specified. So if the SSC or a dependent of the SSC is suffering from such chronic disease and the SSC has incurred some expenditure for that chronic disease, then deduction will be allowed under section 80DDB. See the provisions. The expenditure incurred for the medical treatment of the individual himself or a dependent relative is allowed as deduction. Medical expenditure incurred either by the SSC himself or on a relative dependent, then deduction will be allowed. The deduction is least of the following two amounts: actual amount spent or 40,000 or 1 lakh. The fixed amount is 40,000 or 1 lakh. The least of these two, actual amount spent or 40,000 or actual amount spent or 1 lakh. So when 40,000, when 1 lakh, the maximum deduction will be 1 lakh in case of resident senior or super senior citizen. If the person on whom the expenditure is incurred is senior citizen or super senior citizen, then the maximum limit will be 1 lakh. If the person is not super senior or senior citizen, non-senior citizen, then the maximum limit will be 40,000. The least of the following: actual amount incurred or 40,000, whichever is least for non-senior. For senior, super senior, actual amount spent or 1 lakh, whichever is least, that will be allowed as deduction. A relative means spouse, children, parent, brother and sisters of the SSC. That's it. So these are the provisions regarding 80DDB. So 80DDB is regarding medical treatment expenditure incurred on chronic diseases which are specified by CBDT, such as AIDS, cancer, etc. Right? So these are the provisions. Now I am coming to the next 80E. If an SSC has taken educational loan, this is interest on educational loan. 80E section, deduction under section 80E is interest on educational loan. So if an SSC has taken educational loan for his higher studies or the spouse and children from any approved financial institution, interest paid thereon is allowed as deduction. Sometimes the SSC himself is going for higher education, or the spouse or children, higher education they are pursuing, and for the purpose of higher education loan is taken from approved financial institution. Income Tax Act has specified which are the approved financial institution. So if the SSC has taken a loan from approved financial institution for the purpose of higher education, in that case, during the previous year, any interest paid on that loan will be allowed as deduction. Next one, section 80EE, interest on house loan. Actually, a person may take a loan to construct the house, to build the house, to purchase the house. So if the house is let out, then deduction will be allowed under section 24B. Interest paid on loan taken to purchase the house, to construct the house, to renovate the house, to reconstruct the house. For that purpose, deduction will be given while computing income from house property. Section 24A. But here, this 80E, this deduction is given apart from the deduction which is available under section 24B. Next, 80EEB. A new deduction is inserted by the Income Tax Act, 80EEB. This is for the interest paid on loan taken to purchase electric vehicle. The government wants to encourage the people to purchase electric vehicle rather than conventional petrol, diesel, etc. So to encourage the people, the government is giving the deduction. If a person has taken a loan to purchase electric vehicle, whatever interest paid on the loan will be allowed as deduction under section 80EEB. But the maximum deduction is 1,50,000, not more than 1,50,000. Next is 80G. Very important deduction is 80G, donations. Very frequently in almost many problems we will come across this deduction. Whereas other deductions like 80EE or 80EEB, 80E, very rarely it may come. But donations deduction very frequently you will come across in the problems. So give more concentration on 80G. Donations. If an SSC gives donation during the previous year from his taxable income, then deduction will be given under section 80G. Remember, from taxable income he must give the donation. If he has given the donation from exempted incomes, then deduction will not be allowed. Right? Now, donation of any amount will be allowed as deduction. The Income Tax Act says it's your will. You can give any amount as deduction. We are not putting any restriction on amount of donation. Second, donation in kind will not be allowed. Income Tax Act says deduction under section 80G will be allowed only if the donation is given in cash. If it is given in kind, no, not allowed. Donation from tax-free income are not allowed. Just now I told you. Deduction if you want, then donation should be given from taxable income, not from exempted incomes. Then donation exceeding 2,000 should be given other than cash. If a person wants to give the donation over 2,000, they should give the donation either through check or draft or any other means other than cash. If more than 2,000 rupees donation is given in cash, it will not be allowed as deduction. Then category 1. In order to learn the donations, we have divided all category of donations into 4. All the donations will be classified into 4 categories according to income tax rules. The first category are qualifying amount is 100% and the rate of deduction is also 100%. Qualifying amount 100%, rate of deduction 100%. That means whatever amount given as donation, 100% it will qualify. Example, suppose 50,000 rupees donation is given. The complete 50,000 is qualifying amount. And the rate of deduction is also 100%. That means whatever amount is paid, 100% will be allowed as deduction. So qualifying amount 100%, rate of deduction also 100%. The Income Tax Act has specified which are the donations which are 100% qualifying amount and 100% rate of deduction. You have to remember the important. So a big list is given, a huge list is given. but I have selected only few which are very frequently asked in examination. Prime Minister's National Relief Fund. So if a person, SSC, has donated some amount to Prime Minister's National Relief Fund, 100% qualifying amount, 100% rate of deduction. Means if 10,000 rupees is given as donation, complete 10,000 will qualify and the rate of deduction is also 100%. The deduction will also, you'll get 10,000. 10,000 donated, 10,000 is the deduction. Next is National Foundation for Communal Harmony. National Foundation for Communal Harmony, an institution is there. So if a person has donated the amount for National Foundation of Communal Harmony, then also qualifying amount 100%, rate of deduction also 100%. Next one is a university or any educational institution of national eminence. If the donation is given to a particular university or an educational institution of national eminence, that means it should be recognized throughout the nation. National eminence it should have. Then any donation given to that university or educational institution, 100% qualifying amount, 100% rate of deduction. National Defense Fund, National Children's Fund, Swachh Bharat Kosh, Clean Ganga Fund, Central Welfare Fund of the Air Force, PM Cares Fund, Central Welfare Fund of the Army. So 10 examples I have selected for those category of donations on which the qualifying amount is 100% and rate of deduction also 100%. So while doing the problem, when we come across this point, immediately you should think that qualifying amount is full, 100% deduction. That's it. First category completed. Now second category, qualifying amount is 100%, but the rate of deduction is 50%. Qualifying amount is 100%. Whatever donation you give, the 100% is the qualifying amount, but the rate of deduction is 50%. For example, if 10,000 rupees a donation is given, so 10,000 fully qualify, but rate of deduction is 50%. 10,000, 50%, 5,000. 5,000 you will get the deduction. So which are the items on which 100% qualifying amount, 50% rate of deduction? Jawaharlal Nehru Memorial Fund, Memorial Relief Fund, Prime Minister's Drought Relief Fund, Indira Gandhi Memorial Trust or Rajiv Gandhi Foundation. So these four items you remember. Jawaharlal Nehru Memorial Relief Fund, Prime Minister's Drought Relief Fund, Indira Gandhi Memorial Trust, Rajiv Gandhi Foundation. For these four organizations, if donations are given, then fully 100% qualify, but rate of deduction is 50%. Next one is category 3, where qualifying amount is limited and the rate of deduction is 100%. Qualifying amount is limited. What is the limit? I'll tell you. But first of all, qualifying amount is not 100%, but qualifying amount is limited. But rate of deduction is 100%. So which are the items in the category 3? State government or local authority or approved institution for promoting family planning. If an SSC has given some donation to state government or any local authority or approved institution for promoting family planning, then Income Tax Act says limit, qualifying amount is limited. How much is limited? I'll tell you. The qualifying amount is limited, but the rate of deduction is 100%. Next one is donation by company to Indian Olympics or any other institution for development of infrastructure for sports in India. For developing the infrastructure for sports in India, then donation given will be limited qualifying amount, but the rate of deduction is 100%. Category 3 over. Now category number 4. Qualifying amount is limited and the rate of deduction is also 50%. So limited qualifying amount, but the rate of deduction is 50%. Here limited qualifying amount, but the rate of deduction is 100%. Right? And here second qualifying amount is 100%, but rate of deduction is 50%. Like that. The last category, an approved institution or fund established for charitable purpose. If an institution, if an approved institution is there or fund is there established for charitable purpose, then qualifying amount is limited and rate of deduction is 50%. Then state government or local authority for utilized for charitable purpose, or any notified temple, mosque, gurudwara, church or other place for renovation and repair. So these three items are those items where qualifying amount is limited and rate of deduction is only 50%. So what is the limit? What is the limit for qualifying amount? Here I have explained. The limit of qualifying amount is 10% of adjusted GTI. That means the donation, actual donation, or 10% of adjusted GTI. We compare. Whichever is lower, that is the qualifying amount. That is the qualifying amount. So if the donation is with qualifying amount, with limited qualifying amount, so you have to calculate first of all 10% of adjusted GTI. What do you mean by adjusted GTI? See here, GTI minus long-term capital gain, LTCG, minus all deductions under section 80C to 80U except ATG. Except ATG, all deductions from 80C to 80U that will be deducted. So gross total income minus LTCG minus all deductions under section 80C to 80U except ATG. That is called adjusted GTI. So 10% of adjusted GTI we calculate. And this 10% of adjusted GTI will be compared with the actual amount of donation. Whichever is less, that is the qualifying amount. That is the qualifying amount. That's all. So these are the provisions regarding donations, 80G. One more deduction we'll discuss now, 80GG. 80GG. This is for deduction for rent paid. Sometimes an employee will get HRA from the employer. In that case, he will get HRA exemption while computing income from salary. So this rent, but other assessees are there who are paying the rent, but they may not get HRA. The person may not get HRA, still he is paying the rent. Or some self-employed person, he is not in employment, self-employed, but he is living in a rented house. He is paying the rent. So again, the deduction is available. So any person who is not receiving HRA, and who is not having his own house, either in his own name or spouse or children. Conditions are given. First of all, the assessee should not receive HRA. Secondly, the assessee should not own a house, either in his own name or spouse name or children name. In that case, the rent paid will be allowed as deduction under section 80GG. So what is the limit? If an assessee is not receiving HRA from the employer, or in case of self-employed also, but is paying the rent of the house where he resides, a deduction will be allowed. The deduction is least of the following three amounts, sorry, not two, least of the following three amounts. Least of the following three amounts. First one, rent paid minus 10% of adjusted GTI. Rent paid minus 10% of adjusted GTI. Second, 25% of adjusted GTI. And third, fixed amount of 60,000. The least of these three will be allowed as deduction under section 80GG. Then again, what is adjusted GTI? The actual GTI minus long-term capital gain, LTCG, minus all deductions from 80C to 80U except 80GG. Except 80GG will get adjusted GTI. After finding out adjusted GTI, calculate 10% of adjusted GTI and 25% of adjusted GTI. That's it. So this is the deduction regarding 80GG. So in this video, I have explained you about the deductions under section 80DDB. That is donation. That is a medical expenditure incurred on chronic diseases specified by CBDT, such as AIDS, cancer, etc. Either assessee himself or spouse or dependent relative. Then limit is actual amount, actual medical expenditure incurred or 40,000 or 1 lakh. If super senior citizen is there, 1 lakh. If only non-senior person is there on whom expenditure is incurred, then 40,000. Next comes 80E, that is higher education loan, interest paid on higher education loan. 80EE, interest on house loan. 80EEB, interest paid on purchasing the electric vehicle. Then 80G is for donations. 80GG is for rent paid of the house. Rent paid for the house, correct. That's it. So I have completed the deductions. Still few more deductions are there. Those deductions we'll discuss in the next video. That will be the last video on theory. After that we'll start the problem. And one point I want to make it clear that I have started a new channel by name Khan's Accounting Institute. This is the name of the channel, Khan's Accounting Institute. Please do visit that channel. Watch the videos, enhance your knowledge, and do subscribe. That second channel I have prepared particularly for IGCSE students. I got many requests from students pursuing IGCSE like Cambridge and Edexcel, etc. So for them specifically it is for them, but generally anybody can watch in order to enhance the knowledge. So do visit that channel, Khan's Accounting Institute, and do subscribe. Inshallah, we'll continue our discussion on deductions from GTI in the next video.